and we will get started. So I'm actually in a really sunny spot right now. So the light's kind of bright, but it's probably going to get darker. So we'll just go with it. And if I start to get dark, I'll turn the light on. So the lovely black box is is our friend Geoff Lafleur from ICM Asset Management. Geoff has decided to be mystery man today. Sometimes we have Tammy as mystery woman. Geoff's mystery man today. And you'll see John in the corner there. And John, whereabouts are you chiming in from again?
I'm
Oakville?
just outside of Toronto in Oakville.
Yeah, awesome. And Geoff is in Calgary.
I am.
And Lynn, who has brought this team together. The two gentlemen that we have speaking today are issuers with Raintree. They've got some product for us that they're going to tell us about. And so Lynn is one of our newest sponsors and is doing events for us in Toronto. And we'd love to tell the story about how Lynn stalked me on Meetup. And now here we are. We're doing all kinds of stuff together and building the empire. And Toronto's growing lovely and fast. And so, yeah, we're really excited to have you on board, Lynn. So thank you very much. I'm just going to go through a couple of slides here. And I'm also going to tell everybody I'm using my brand new computer today. And so if I suddenly get this like terrified look on my face, it's not you, it's me. It's me trying to figure out how to drive my new computer. So I'm going to see if this works. Keep your fingers crossed. Okay, ready? Oh, I'm not there yet. Okay, hold on. Oh, there we go. Now I'm jumping too far ahead. Okay, there we go. So I also always like to say a big shout out to Sherry. Sherry is over here in Victoria, and she does lots of work with me and our ladies, and she's doing development, and she's a great realtor, and she's got a co-house. We talk a lot about co-housing. She's got a really great co-house in Victoria right on Cordova Bay. That we're probably going to have a look at next week. So she has an open house this weekend. So if anybody wants to go to the open house, send her a message or send me a message and we'll get you the address. She's just updating the listing. And huge thanks to Sherry for supporting us with WREN. And we've got a couple of great guests tonight. As I mentioned, I did a quick scan on the website and found a couple of things that I really liked. So Geoff, I love this. $815 million assets under management, 16 years in business, 6,000 clients, 99% client retention, and 0 investment losses. That sounds like the kind of group that I'd want to deal with and invest with. So I grabbed that. So we're going to hear from Geoff. And of course, investing in the Canadian self-storage industry, we talk about what are some of the hottest investment opportunities, mobile home parks being one and self-storage being another. Lots of people have stuff, a lot of people are downsizing, people still don't want to get rid of their stuff. And one of the conversations that I had a little while ago was how the self-storage industry is trying to make their buildings more attractive to women. Because women don't want to go down to dark, ugly storage buildings. So it's really interesting how even storage has kind of come along in how it's being marketed and being more attractive to women. Because yeah, I know we talk about this all the time, but women actually are driving the real estate market. So always fun to talk about. And then a couple of outcomes. So we always like to just talk about, you know, you're kind of getting a sense about who we are. We're going to talk about some options for you. We're going to invite you to participate. So you've got that question box down there. You're going to have everybody's email address. We want you to reach out to these people. They're here for you and your journey. So please make sure that you participate, share your goals, share your plans, ask questions. And then finally, I always like to put a little reminder up there that it's not all about real estate. We all love using real estate as a tool, but it's not really about the real estate. It's about the lifestyle that we're able to live because of some of the passive or active income that real estate provides for us. So that's a little bit about that. I always like to pop up this little slide about working with women and men. I know we've got a couple of guys on tonight. So you can pop into the question box and say hi. And for those of you, you may see me looking over to one side. My housey Bill is in sitting next to me. We have so many people on the on different webinars in the house tonight that we're jamming up the system. So Bill's listening from here, so you can wave to Bill and he'll see you. As Stefan's on, so I know he's going to say hi in a second. Yep, that's what's up. Hi, Steph. So yes, we definitely market to women. So if you're a guy who likes pink and you like women, then you're welcome to come hang out with us. And as long as you don't mind us talking girly, we're all cool with that. So what we're about connecting with like-minded people, collaborating to enlighten, educate, and encourage, and to create and celebrate community. And that's really it in a nutshell. We want people to feel like they're feeling like they can get some empowerment from the enlightenment, education, and encouragement, and feel like they're part of a community. It's kind of that whole thing of, you know, finding your tribe, finding your people. And there's definitely lots of women who are wanting to learn more about investing in real estate. And because we do things a little bit differently, it's nice to have a space for the ladies to hang out. And it's, yeah, it's pretty cool. We're having fun. So I just popped this slide up there as a reminder. So it'd be interesting. I'm just going to jump down into the question box for a second. So bear with me. I've got to just jump down here and see who's posted comments or questions. And hi, Debbie. And it's just going to, as I say, I'm on a new computer, so it's going to take me a minute to just figure out how to drive these things. It looks like it's a little bit stuck, but that's probably just the operator. So I know that there are probably a couple of new people on, and I'll figure out how to drive the question box. But one of the things we always like to talk about is these economic indicators. So when we're looking at investing in new areas, why are we looking there? What's going on in the economy? Is there employment growth? Are people moving in? Are they coming in from across Canada? Are they coming in from other parts of the world? We were joking in Victoria in 2018, a lot in 2018, because people were talking about foreign investors, and we were saying, yeah, our foreign investors are coming from Vancouver. So we had lots of people who got priced out of the Vancouver market and decided to move over to Vancouver Island. So great stability on Vancouver Island. It's a military town. There's cruise ships. There's the tech industries growing. So it's all of these kinds of things that you look at when you're making these investments. And of course, as more people move in, rent goes up. And then as rent goes up, values go up. And so lots of things start to happen that indicate that that's a good market to invest in. And so this is just the kind of one of the things that you want to start to look at when you're looking at an investment property or making some kind of a real estate investment, whether that's a passive investment or an active investment. So I just have to jump back up to that slide again. I wanted to just touch quickly on membership. There might be a couple of you who are here for the first time. I always like to make sure that everybody's got at least one chance to come and see what a webinar is like. We do these twice a month for members, always a different subject. We've got some fun ones coming up. And if you become a member, you get discounted tickets. This year, you actually get 5 free meetup events with your membership. Lots of the webinars, lots of stuff. So you can see that list there. And right now, it is $5.99 per year, and that's $5.99 from the day you sign up. So I just wanted to make that nice and simple. So it's a 1-year membership. And a couple of save the dates here. February 19th is the next webinar, and we've got some mixers coming up. February 26th, we're in Toronto and Victoria, and on February 27th, we'll be in Vancouver. So watch for those. We'll give you some more information on those, but just a couple of dates to save. There's lots of partner events coming up as well, and I'm going to put those in a post on Facebook. And right now, what I would like to do is turn it back over to Lynn. So Lynn, I'm going to give you control so that you can put up your slides. So just give me 1 second here to get my little mouse back onto my other screen. And Lynn is going to tell us a little bit more about Raintree and the exempt market. So just click, click, click. My little mouse that I've got on my new computer is really fast. I haven't quite got it adjusted yet, so I have to slow down. Give me a second, Lynn. I'm almost there. All right, Lynn, I am making you the presenter. Oh, hold on. No, wait a second. Melissa, I just
Now
made
you're
you the
big.
presenter. Give me a sec. I'm getting there. Hopefully you're not naked, Melissa.
I am not.
All right, let me get back to me. La 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 la. Okay. Fun. All right, hold on a sec, Lynn. We're almost there. No, it looks like I have to make me presenter first, so give me a sec.
Take your time. I turned off my video so that my audio would work cleaner, hopefully.
Uh-huh. And I'm stuck. Okay, hold on. Request. Okay, I'm going to try to take this back because for some reason we were able to take power away earlier. But okay, I think I'm back now. For some reason, Melissa, for some reason, I can't get rid of you.
Can you hear me?
I can hear you, yeah. Let me just,
yeah, something came up on my screen. I turned one of them off. It says show your screen. So how do I not show my stuff?
Yes, so let me just try one more thing here. And
should I click change presenter?
Yes, if you can click change presenter, try it from your end. As I say, we've done this all day and it's worked just fine, but today or right now it just seems to be stuck. So make me presenter if you can. Oh, technology.
You can see me. Good. Give control of your mouse. Make another attendee the presenter.
Yep, see if you can do that.
There. Yeah. 1 second.
Cool. All right, so I'm the presenter again. All right, step one. So now Lynn, let's see if we can do Lynn make presenter. Okay, Lynn, did it.
Did it. Okay, so show my screen. And then I click to here. Oh, and I need to hide that box. Whoops, and that brought you back to there. Okay, I'm good here.
All right, we can see your screen.
Excellent. Well, hello, everybody. So my intention is to do about 6 minutes overview of really just what is the private market, kind of a setup for Geoff and John to then give you an introduction to their offerings. Really, it's easiest to understand with examples. But so to get started, as Liza mentioned, I stalked her on Meetup a few months ago. And then I'm thrilled to partner up and support some of the Toronto initiatives that are happening. So a little bit of my background, I have an engineering degree and an MBA, and I worked in management consulting for 15 years. I left in 2015 and started to look into ways to invest and found the private market at that point. Well, and really a little bit before that even. But I joined Raintree in 2017. So real estate is something that our family has invested in for quite some time. We started with private and syndicated mortgages quite a few years ago. We've done JV real estate properties and still have an individual investment property. And now my focus is turned to the passive real estate and private equity funds, to like what Raintree offers. So now, as Liza mentioned, it's REN is more than just the real estate. It's the community. It's lots of different things, and it's finding some like-minded people. So I was thrilled to hear there's others out there that are. My ultimate goal is location independence. You'll see that that's just about my dream. That RV travel trailer in the mountains. That's the plan, to travel, volunteer, and work from the road, likely a cottage property for a home base, and then we're on the road. A couple more years for that. So that's a little bit about me. I'm going to keep going just for time here. Okay, so this slide, what is an alternative market? So the alternative market's relatively new for, particularly if you're in Ontario, it's relatively new to Ontario investors. It's also known as the private market, private capital market, exempt market. Essentially, it is investments that are not available on the public stock exchange. So in that blue italics writing there, that's our kind of new compliance defined alternative investment market. So alternative investments are groups of investments with risk and return characteristics that differ from those of traditional stock and bond investments. So all alternative investments have some common features. The biggest one being relative illiquidity, which means you can't trade these things on the stock exchange. You can't cash them in tomorrow if you need some funds. So certainly meant for long-term growth savings. However, what you're giving up in a liquidity, it is associated then with a return premium. So you can expect to have a higher potential return because you're giving up liquid access to your funds. Another feature is the ability to create some diversification within the portfolio of stocks and bonds. Now, they are a little more complicated to understand, so there can be some high due diligence costs just to understand the structures, understand management. There's not always a lot of reporting out there. For this reason, it's useful to use someone like a Raintree, an exempt market dealer that has a corporate office that can help do some of that due diligence and share their experience on what to look for with our clients. And then a final point in our official definition is it can be difficult to do a performance appraisal of private funds. So often on the stock market, companies will be compared to the overall TSX or compared to different sectors. Because all the private investment offerings are unique, they are difficult to find comparators, and that information is not always available. So you'll see, certainly, I know different companies will attempt to find benchmarks, but they can be more difficult to find. So I find that overall definition a little bit confusing. How I, my kind of layman terms, I would say the private investments are those that are offered without a prospectus, and that's where the exempt term comes from, usually by private companies. So in a nutshell, you cannot trade these on a stock exchange. So that's the illiquidity idea. And then what are you purchasing? Typically, you're purchasing units or shares in a fund. And then that fund is often registered account eligible. So that's kind of one of the big questions we get is, are they registered account eligible? The second question we get, or I guess third question we get, and not always asked, but you can kind of see it in people's mind, is, am I eligible to invest in the private market? So the rules changed, well, in Ontario in 2016 and out west earlier than that. Historically, it was an accredited investor only that could invest in the private market. So an accredited investor, total net worth of 5 million, financial assets of 1 million, or individual income of $200,000, or household, with a spouse income of $300,000. Now, each of those are or statements, so you don't have to be all of those things. You can be just one of those things to be considered an accredited investor. And an accredited investor, it's a little bit easier for them to make investments. They can invest, there's no limits to the amount that they can invest in the private market. Just by virtue of the financial assets that they have, they're deemed to be more sophisticated investors. And what has changed is that there's now the eligible investor category. So an eligible investor is somebody that has a total net worth of $400,000. And that's a net worth figure, so it can include real estate assets, including the primary house, or somebody with an individual income of $75,000 or household income of $125,000. So with that category, well, in Ontario, 10 times more people became eligible to invest in the private market. And just in the footnote at the bottom there, just because somebody is eligible doesn't necessarily mean that they're suitable to invest in the private market because of the liquidity, because of lack of information. So that's where really I come in to help work with people to understand, is this an appropriate thing to add to their portfolio? And then, so how does kind of Raintree fit? So essentially on the left-hand side, it's businesses that are looking to raise capital. So they have growth plans and visions and a way to go out and make money. And if they had some investments, they could accelerate that growth. And the businesses can be in any industry. So we see a lot of real estate driven offerings, but there's certainly other offerings out there as well. And then, as I mentioned, we've got our corporate finance team that is doing due diligence on those projects, on those offerings, helping to structure the deal and making sure that making sure management interests are aligned with investor interests. And then also from the Raintree side is the advisors like I am, and I actually work with the investors. So on that right-hand side, investors that are looking to balance opportunity with diversification. So Raintree is sort of in the middle between the businesses and the investors. And then on the Raintree front, so Raintree actually we have roughly 15 different offerings on our shelf at any one time. The idea with the private market or the alternative investments, so the first step I do with a client is help to understand what percentage of their overall kind of financial assets do we want to put into the private market. So it could be anywhere from 20 to 40 to 50%, depending on their sophistication and where they're at. Once we understand how much we want to put into the private market, then we look to say, okay, and how will we diversify the private market allocation just to add further kind of risk mitigation. So the same way you don't pick any one stock. If you're in the stock market, you don't pick any one investment fund. Which is why, it's great to be able to have two companies on a call, because typically we would recommend splitting an allocation from anywhere from 4 to 8 investments over time. And that's my introduction to the private market. So I think we're going to turn it over to ICM first.
That's awesome. Thanks, Lynn. And just wanted to mention, so for those of you who have RSPs and are getting, a puny amount of return, the exempt market potentially can give you some better returns. And we'll dive into the RSP conversation. I'm just going to get Geoff up here. So Geoff, let's see if I can make you a panelist easier than before. And give me a second here. For some reason, it is wanting to keep making my attendees panelists. Carol, it wants to make you a panelist now. So give me a second here.
Liza, I think I can make Geoff presenter.
Okay, that would be great. That would be awesome. Can you go ahead and make Geoff presenter?
I tried to shut mine off, and then it said, why don't you make Geoff? And it's like, okay.
Beautiful. Excellent. All right, Geoff, we can see your screen.
Great. Perfect. Great. Well, thank you very much. Certainly appreciate everyone for taking time out today. So I think Lynn has done a great job of just really at a high level, just talking about where private companies may fit within your investment portfolio. And so I'll do my level-headed best here in the next 10-15 minutes or so to just kind of weave our story with respect to, again, where as a private company that may solve some problems for you or potentially fit into some holes that you may have within your portfolio. So just really quickly, right off the bat, my name is Geoff Lafleur. I'm the Vice President of National Sales at ICM Asset Management. We are a Calgary-based company, but have 5 offices across the globe. We have a U.S. office in Atlanta. We have an office in Mexico City. We have an office in Edmonton, Alberta, and then Munich, Germany as well. But our headquarters is absolutely in downtown Calgary. The fund I'm going to talk about today is called Property Partners Trust. As mentioned, we are a private company. We choose to be private. There's a number of reasons why, but ultimately, one of the things that I think is quite important and actually relevant right now is that certainly there are opportunities to invest in the public market. Within real estate, there's an untold number of different real estate investment trusts or REITs that are available to you. But the one thing that we really have been focused on for the last 30 years under the watchful eye of our president and CEO, Bruce Timm, we're really focused on managing family office capital, retail capital, institutional capital that really believes in investing into strong real estate markets, mostly from a diversified portfolio perspective in North America, and then taking advantage of the characteristics and attributes of income generation, tax efficiency, as well as long-term growth as well. And so this is a fund that is built to do exactly that. It's an open-ended fund where you would make an investment with us. Lynn talked about just liquidity. We are absolutely considered more of a medium to longer term hold. In a lot of cases, we have clients that have invested with us back as far as honestly the 70s that have invested in funds that we continue to manage even today. So 4 or 5 decades, multi-generational wealth, again, investing into very strong strategic markets in North America. So we'll talk about that in a little bit more detail. In terms of where we may fit within your portfolio, or maybe what problems are we solving, absolutely we are a passive real estate option for you. Due to where we're investing into different projects, development projects, in-place assets, there absolutely are tax efficiency benefits where, in our case, the income that is earned each and every quarter, a good majority of that is what is called return of capital. So you're not being taxed on that today. So tax efficiency is very, very important with respect to any investment. And then at the end of the day, it's a very low stress, I would say, if not stress-free investment, where you don't need to make a decision on a daily or weekly or monthly basis about, is now a good time to sell? Is now a good time to buy? If a market is either, changing, turning, heating up, cooling off, you don't have to make those decisions. You're effectively paying ICM Asset Management to do that on your behalf through a very large number of markets in North America, including Canada, the US, and Mexico. So I've got about 40 slides and only about 10 minutes, so I'm gonna have to go pretty quick. But ultimately, this is a fund that is set up to do a few different things. But again, the big thing is that this is completely passive. Once you make that decision to invest with us, you would effectively, the control of that is really in our hands, and we have very, very strong alignment with you to ensure that we're preserving that capital, but also growing that. So just right off the bat to talk about the fund structure, we are looking to deliver a 5 to 7% distribution per year. The majority of that is a tax efficient return of capital. So again, you're not being taxed on that today. And then a total target return objective of between 9 to 12% per annum. So again, important to see that you're earning a distribution each year as the value of the portfolio goes up over time. Again, you would be able to realize that growth ultimately when you elect to redeem out of that investment in a future year. So real quick, I think it's critical to understand who is managing your money and what they've done. There's an awful lot of numbers on screen here, but I'll talk about some of the ones that are most meaningful to us and our investors. We're a very large and established firm. We're managing about 850 million of assets today. We expect that to be $1 billion by the end of the year. We've been in business under the ICM brand since 2003, so almost 17 years in business. It is interesting to note that our CEO, Bruce Timm, moved from Calgary to Munich, Germany in 1989, started managing high net worth family office capital invested into North American real estate. And again, those investors have been with us ever since. So we have a 30-year relationship with about 70 different high net worth European families and family offices. So again, the fact that they elect to continue to stay invested with us should be a very strong testament to our ability to preserve their capital and then grow that to be multiples of what it once was. We have about 7,000 clients today. Very, very proud of our retention of those investors is over 99%. We've never had an investment loss. We've never lost a building to foreclosure. And any investor that has stayed with us and seen their investment with us mature, we've never had an investor lose a dollar as well. Over the years, we've distributed almost $160 million worth of capital to our clients, again, with no losses. We've grown substantially in the last 4 or 5 years. I think I joined as employee number 8. We're now over 50. We added 3 people today, and again, have a very large portfolio of assets in a number of different North American markets. Just real quick, there's way too many people on this slide to go through this in detail, but really what I see here is a team that I'm very, very proud to work with every single day. It's a very, very strong team of financial professionals, of accountant professionals, of business professionals, sales professionals, asset managers, portfolio managers, you name it. And this is not even the complete list. This is basically just our Calgary office for the most part, and then some of our asset managers. So very, very proud to see a very diverse group of professionals that I get to work with every single day. Again, the key folks are folks like Bruce Timm, CEO and president. I won't get into too much about Bruce, but he has the notoriety of acquiring the Chrysler building at one point in his career and selling it. He acquired 666 Fifth Avenue. He paid $518 million for that, and then ultimately sold that to Jared Kushner when he was 26 for $1.8 billion. So Bruce has been a part of some of the most iconic real estate transactions in North American history. So very, very esteemed professional on the real estate side that has done an awful lot in real estate in North America. So real quick, obviously knowing what a team has done with respect to investment performance is critical as well. We've generated almost a 12% net of fees return each year when you look at all of the fund activity that we've been a part of since 2003. So very, very strong results. And again, if you put yourself into this position, if you would have given us $100,000 back in 2003, effectively we would have delivered almost a $550,000 return. And again, that is net of fees today. So, you know, really with respect to where we fit, if you have registered funds, if you have cash, if you want to make an investment that is passive, where you can effectively, you know, make that investment and then, you know, to some extent forget about it for 10 or 15 years. Historically speaking, this is what we've been able to do for a very large number of investors, including our German capital that has seen their money grow 4, 5, 6, 7 times over. And then also we still hold the majority of the real estate within their portfolios. So very, very strong results. And in comparison to the S&P 500 and the NAREIT All REIT Index, we've provided a substantial amount of outperformance over those 2 indexes as well. So real quick, in terms of this fund, what do? We're investing into a number of different North American markets. This, frankly, is almost impossible for you as an individual investor unless you have hundreds of millions of dollars to spread out across different cities, markets, submarkets, asset classes, investment types with different currency exposure. This is a fund that has been designed to do all of that for as little as a $5,000 investment with us. You get what we call uber diversification across a number of markets that we're very, very interested in. And then again, our very strong markets that are growing, that have very strong economic drivers, as well as substantial population growth. And we'll talk about that if we get time in a few minutes. One of the big things I think about this particular fund is the fact that we get to cherry pick where we deploy capital. We will have raised $100 million last year, and certainly raising that amount of capital is impressive perhaps, but it's nowhere near as important as effectively and safely deploying that capital. And so we get the privilege and opportunity every single month to literally cherry pick the very best opportunities in the markets that we're focused on, and that would include office, industrial, retail, multifamily in cities like Atlanta, Dallas, Charlotte, Nashville, Minneapolis, Calgary, Monterey, Mexico City, Guadalajara, Edmonton. So again, that type of market access is just frankly quite impossible. And so to be able to make that investment with a group and then basically, forget it for a few years or hopefully 5, 10, 15 years. Again, this is quite a bit different than a lot of active strategies that requires a lot of heavy lifting, boots on the ground type commitment, and typically a fair amount of work for sure. So quite a bit different, again, as a passive investment. One thing I think is important is the fact that this truly is an institutional quality investment. And the reason why I can say this is that in late Q4 of last year, one of Canada's largest pension plans had effectively worked with us to look at a project in Guadalajara, Mexico. It's a Class A industrial project. And through a number of months and quite difficult due diligence on their part, they ultimately elected to work with us. And so we are partnered with one of Canada's largest pension plan managers, who manages about $120 billion worth of assets today. So truly this investment, and then ICM as a group, truly is an institutional quality group that you're able to take advantage of, again, for as little as $5,000 in a registered plan. This fund, again, is taking advantage of all different asset classes. And the reason why that's important is ultimately there are different trends, different opportunities that are emerging in different asset classes in different markets at different times. So we wanted the agility to be able to focus on opportunities as they emerge. And for us in 2020, that increasingly is focusing on things like industrial. Obviously, we're all Amazon users. The effects of e-commerce on real estate have been substantial, and not just here in Canada, certainly in the US, but also in Mexico and globally. So we are a part of an increasing focus on industrial projects throughout North America. Very, very strong return profiles here. There's very little effort once you have built that project. There's not a lot of tenant improvements you need to put into industrial space. So as an asset class, we really love it and are really starting to focus even more in 2020 and beyond. So real quick, I won't go into too much detail here, but one of the things about making an investment in a fund like this with a firm like ourselves is that we are focusing on so many different things. Obviously, if you're doing this on an active basis, if you're doing this cross-border, you have to worry about cross-border taxation. You have to worry about a W-7, an ITIN form. You've got a whole bunch of things you need to worry about. You may need to be focused and worried about hedging, for example. So all of that is effectively taken care of by, again, working with a true professional with cross-border experience, not only in the US side of things, but also in Mexico as well. So all of our different strategies, whether they're income and growth, which is buying in-place real estate, development, which is being a part of shovel-ready development projects or redevelopment projects, or also things like high-yield lending, which are quite a bit different for some real estate investors. But for us in Western Canada, the ability to partake in opportunities to lend capital into very strong projects, earn a 10 to 16% return, but be in a much safer position within the capital stack. These are things that have relatively new for a lot of investors, but again, this is a very important strategy for us to generate income. So with just a minute or two left here, I'm going to skip ahead to some of the activity that we're involved with to give you some idea of the projects that we've already made investments into that have already crystallized results. So this is a project called Life in Calgary, Alberta. We have been very, very careful to deploy capital into the Western Canadian market, but this is a great example of a project that we got involved with that has done incredibly well. At first, it was meant to be a for-sale condo, but the developer did not get the pre-sales they needed after oil had collapsed here in the last 4 or 5 years. So we got involved and instead turned it into a highly amenitized condo in Marda Loop. For anybody that is familiar with Calgary, it's an amazing part of Calgary where the average single family home price is about $1 million, which is more than twice the average of a single family home in Calgary proper. So we knew it was a great area, and so we built this amenitized condo in a very, very strong market. We took occupancy in April. We're 95% plus occupied today. We're in a position to refinance with CMHC debt at 2.5%, and this will easily deliver a 20 to 30% IRR in a market as tough as Calgary. So again, very, very impressive results in Calgary despite a very, very tough economic condition. Real quick, I won't spend too much time here, but the opportunities in the US and Mexico are really quite incredible right now. Occupancy in the US is at its highest level in 15 years. Unemployment's at a 50-year low. The delivery of new product is able to earn a 20% premium, and we're a part of a lot of different development projects in the US right now. We're really loving the growth story in Atlanta. Atlanta has grown by 700,000 people in the last 8 years. In the next 25 years, it's expected to grow by 2.7 million people, which for anybody on the call from Vancouver, that's more than the entire greater Vancouver population. So again, very exciting growth in a city. So this is why we're deploying quite a bit of capital into Atlanta. We're a part of multi-$100-million projects like Star Metals here in West Midtown Atlanta. That is a two-phase project of both offices and a beautiful residence as well, with a rooftop pool. We're well underway and progressing very, very strongly within these projects. These again are institutional Class A projects worth hundreds of millions of dollars. In this case, being developed in partnership with $1 billion firm out of Florida called Allen Morris. This is their 83rd development project. So pretty exciting to be a part of really incredible projects like this in West Midtown. This is just a picture of the rendering, and then this is the current state of the development. Very, very strong results and progressing very nicely. And then with 1 minute left, I'll maybe talk about Mexico. Why are we in Mexico? A few things that really make Mexico quite unique. It's a nowhere near as competitive a market as the US or Canada, where if you're looking to deploy between 5 to 50 million, there's very little competition in comparison to the US and Canada. We are able to generate returns that are easily in the 20 to 30% IRR range, in a lot of cases without the use of debt at all, which is just frankly not possible in the US or Canada. We're taking advantage of some incredible macro conditions where in Mexico City, there's a massive shortage of rental housing. If you look at Calgary, Vancouver, Montreal, Toronto, you see some deficit there between maybe 4,000 and 9,000. Mexico City shortage is 332,000. That's more. There's more of a shortage in one city in Mexico than there is in all of Canada combined. And so we are thrilled about being able to deliver multifamily projects into a market that massively needs it. So I think that's it for time. I'd love to go into more details, but again, these are the things that you would follow up with Lynn on. But overall, very, very exciting times, especially on the back of this project, which again is a partnership that we have with one of Canada's largest pension plans. So if you have concerns about who we are or what we're investing into, just know that floors of CFAs, CPAs, and CAs have vetted ICM as a group before they allocated capital to a ground-up industrial project like this in Guadalajara, Mexico. So I think with that, I'll leave maybe a couple minutes for questions here, but certainly follow up with Lynn if you have any questions at all relative to ICM Property Partners Trust, and just want to thank you for your time.
That's awesome. Thank you, Geoff. I love the diversity and the fact that you can get started with as little as $5,000 and you can have investments across the whole of North America, from everything from hospitals and hotels to retail and residential. It's so awesome. One of the things that I've been hearing from investors over the last 18 months is a lot of people kind of start with the fix and flip and start with very active work, and they're on the tools doing the work and taking some risk with having all of their eggs in one single family home or maybe a duplex. And now people are starting to wake up to the idea of more passive investing, and the exempt market offerings are just phenomenal because of the diversity. And I've been doing lots of research on Mexico and really the emerging markets, and we can barely even call Mexico an emerging market anymore because it's just so strong and growing across multiple industries. So that's awesome. Thank you. So if anybody has any questions, pop them in that question box. And while we are, just because it's 1:45, I'm going to jump straight over to John. And so Geoff, if you can do me a favor, since we're having some technical difficulties, if you can make John the presenter, wonderful. Thanks for doing that.
No problem.
John, I'm going to just see if there's any. It doesn't look like there's questions right now, but there could be. I mean, I don't think it's an issue with my computer, with my new computer. but we're going to hear now from John with Makespace Capital. He's the business development person there. And John, you and Lynn got together in Toronto and chatted with some of the ladies over in Toronto, and I just love learning about other opportunities. And thank you for being here today, and thank you for presenting what you are doing. So take it away.
Thank you very much, Liza, and thank you, Geoff. Appreciate it. Yeah, we're not as diversified as the ICM offering. We're more of a specialized offering, but a lot of attractive features and benefits of this also. So first of all, I want to welcome everyone. I just wanted to really share a high-level introduction, to the really most important unique aspects of the Makespace Capital Partners offering. Can you guys see my screen okay?
Yep, I can see it.
Yes, indeed. It looks great.
Okay, terrific. Just trying to get the screen to flip here, and I apologize. It seems to be locking up a bit here.
That's okay. If you click on your active screen, it should wake it up.
Okay.
There you go.
There we go. Oh, I think we got it. Thank you very much, Liza.
Awesome.
All right. So demand for storage facilities. There's been a lot of interesting press lately on the self-storage industry. It's been recognized as a really high growth industry and has been for some time now. And it's really following trends in residential and commercial real estate and really benefiting from smaller living spaces. People have more stuff. And of course, mobility is much higher than it used to be. So we're really seeing demand grow across the board in the United States and Canada. With Canada's favorable immigration policy, along with natural population growth, the gap between demand and supply continues to be very wide. We're also seeing, as we talked about, living spaces becoming smaller. The older generation is downsizing, and people in general are much more mobile. And we've also seen that storage needs can actually increase during a recession as consumers may be forced to downsize, but still want to hang on to some of their important things. And self-storage can really benefit from this extra demand. So we're seeing that consistent demand, and currently the Canadian market is still underserved with the per capita storage capacity of about 2.5 square feet per capita in comparison with about 9 square feet per capita in the United States. And we've also seen that unlike other commercial real estate investments, self-storage is not really reliant on a single or small pool of tenants. Self-storage tends to have a large base of tenants with less of a financial contribution to the bottom line per tenant. So this really provides diversification effect that protects self-storage investors from a dramatic drop in tenancies. And in 2008, the narrate, as Geoff was saying, the all equity index lost about 40%. The self-storage REITs actually returned about 5% during that period, including dividends. So what we're building, this is what our portfolio is going to look like. We're looking to build a portfolio of a minimum of 15 facilities across Canada in diverse markets, with a little over 1 million square feet and 7,000 units across 3 different revenue streams. And the current breakdown right now is about 60% fixed storage, 20% portable storage, and about 10% flex storage. So here's the companies. Makespace Inc. is the manager and partner of the fund. Broad experience, 15 years or so, in experience in trucking, freight, and logistics. They own and operate associated businesses that drive revenue towards the fund, mitigate risk and reduce costs. And Makespace Capital is the investment fund, investment arm. It's a British Columbia-based company and Canadian-owned self-storage company. Okay. Okay, so a couple of unique attributes of the business model is that we're able to generate 3 revenue streams as opposed to 1 for a typical storage facility. Stabilization essentially means that properties showing positive cash flow and are producing a yield, so they're running near capacity. And typically when a storage facility reaches that point, there's very little that can be done to increase revenues other than raising rates over time. With Makespace, we have the opportunity for continued revenue growth through offering portable storage, that's containers and pods, and flexible storage, which is on-demand storage. In the flex market, we have an active and vibrant business right now in the storage business for car dealerships. As we talked about, one of the attractive benefits is the three profit streams as opposed to one. The first being our traditional fixed storage that we all know and love. You've seen them and perhaps used them in the past. These are the large buildings with rows of storage and lockers. And then we have our portable storage, which is containerized storage that is delivered to a customer's location, which can be left on site for the duration of the project and delivered to a new location if needed at the customer's request. And of course, we have flex storage, on-demand storage for excess inventory business. An example is winter storage, as we have going on right now. So we're just in the process of completing our third acquisition in Prince George. It was an off-market deal that came to us through our existing relationship. And this will bring our total portfolio value to just north of 25 million and 25% of our portfolio goal already. That's within less than a year. And our line of sight of our current portfolio, we also include our development projects, will bring us to about 50% of our goal. So we have two current locations, one in Winnipeg and one in Pender Harbor, British Columbia, a total of 160,000 square feet. We're just completing acquisitions in Prince George, two that started in the fourth quarter of 2019, and that third unit is just coming on now. So we'll have 5 units in total. We also have a development pipeline, and here's a quick look at our current locations, one in Kitchener, Ontario, Edmonton, Alberta, Vancouver Island, and also Toronto. These projects are in various stages of development and contract negotiations. The Kitchener development is in the process of having conditions removed. Vancouver Island is in development along with Edmonton and Toronto. And we're building out these facilities in key locations across Canada in diverse markets with the idea of building portfolio that would be attractive to an eventual institutional buyer. So here's a look at one of the development properties in Kitchener. I'm not going to waste a lot of time on these slides. We're sort of going to just walk through this because we don't have a lot of time. I just want to get you a key sense of some of these properties and what they look like. This is part of our current portfolio in Winnipeg. All locations are close to high visibility, high traffic locations. And then our growth and exit plan. We're looking at rate appreciation, expansion of on-site storage, and we have really a realistic plan in play for growth of all our storages. Even if market fundamentals like high-priced real estate and a small amount of storage available for sale, our ability to run the storages in secondary markets with high visibility are more synergetic with our businesses and allow us to grow where others would probably struggle. So here's an example of a couple of institutional portfolio buys in Canada, one in 2017, one in 2019. So in 2019, Real Storage was purchased by Storage Vault for $275 million with an estimated cap rate of 4.75%, which means essentially that the multiple was very high on that purchase. So what are some of the key risks as we look forward? Rising interest rates can always be a risk, but really unlikely in the current macro backdrop. With current slowing economies, global central banks around the world are actually lowering interest rates to spur economic activity. And if we look at the bond market, the current bond market as a guide, we may even see more rate cuts through 2020. If for some reason rates were to rise, we can't really see it right now, it may play well for cost-effective acquisitions as multiples may come down. Depth of team always is a risk, but the good thing with Makespace Capital Partners is the executive team have combined decades of success and experience in the storage business. Management also controls strong associated businesses that drive revenue, mitigate risk, and keep costs down. Management is also aligned with investors with their own direct equity investments into the fund. So oversupply in the storage market. So we kind of address this by having locations in multiple markets, diverse markets. We like to stay away from pricey urban centers and focus in locations on the outskirts on high traffic areas with effective pricing. So who's the team? Vaughn Koeman is our founder and head of acquisitions. He's been in the self-storage business since 2004. And because of his wholesale container business, he's been very well connected in the industry, which allows him to get a real jump on deal flow. He's also the founder and past CEO of Makespace Inc. and is being actively involved in developing and managing self-storage, portable storage, and container leasing over the last 15 years. Danny Friedman connected with Vaughan in 2010, and between 2015 and 2016, Danny purchased a 50% share in Makespace Inc. and joined Vaughan in his vision to grow a self-storage and containerized storage business. Danny's focused on the business development, and particularly in relation to growing the mobile fleets and executing on our container sales growth and self-storage acquisition strategy. Terry Thomas, our CEO, came on board with Makespace in January 2018 and brings about 20 years of executive experience at some of Canada's leading companies. Prior to joining Makespace, Terry served in several leadership positions with Brinks, Coca-Cola, Hudson Bay, and First Credit Union. His emphasis has always been on real estate acquisitions, development, and supply chain management. And Mark, here's our great guy. He's our Director of Financial Reporting. Key oversight, Joe Friedman, Chairman of the Board. Joe is a Senior Vice Chair at Brookfield Asset Management Private Equity Group, responsible for storage initiative or strategic initiatives and planning. And also we have Reed Carter, also a former Managing Director at Brookfield Asset Management. And Reed led Brookfield's Timberland portfolio growth business from a modest operation of 310,000 acres under management to one of the largest timberland estates, growing to approximately 3.7 million under management in the United States, Canada, and Brazil. So the offer, we're looking to raise initially $30 million. It's a fairly new offering, less than a year old. We're currently offering a 6% per annum yield that's distributed quarterly with a target return of 12 to 15% per annum. The initial term ends 2025 with 2 potential extension periods, 12-month extension periods, in case when we reach our initial maturity, the market's in a downturn or we're in a recession, it may not be a great time to look at selling the portfolio. We have the option of having extensions in there also. Attractive splits, 80% in favor of the investor, 20% for the management company after a 8% hurdle rate for the investors. And management fees currently running 1.5% annually. So if you're interested in this and looking further, once again, contact Lynn. These are RSP eligible also, and can start with a minimum investment of $6,000.
Fantastic.
So I'm sorry.
I was going to say that sounds great. I love the fact that you can start with $6,000.
Exactly. Yeah. And just to wrap up here, the Makespace advantage is management experience and alignment. Management has a 25% stake in the portfolio also, so they're heavily aligned with the investors. A deep source of acquisitions through our development pipeline, proven strong downside protection in recessions, and your cash goes to work right away, taking advantage of that 6% yield. Anyways, that's a wrap up for me. I know we just had a short amount of time. That's a real high level overview. Thank you very, very much for having me. And Lynn and Liza, I'll pass it back to you.
Terrific. Thanks, John. And if you can make me the presenter, that would be great.
Let's see if I can.
That will be my homework before the next webinar, is to make sure I know how to drive my new computer. Hi, Lynn.
Okay, let me just.
Hello. Thanks, John.
Thanks, John. That's awesome. And I know that Geoff has dashed off. He had to get a move on because he had a couple of other things to do. But one of the things that I wanted to do is just, remind everybody that you really want to be contacting Lynn to get more details on these kinds of things. And Lynn is licensed to help us out here in BC as well as in Ontario. So that's great to have Lynn being able to serve us in a couple of different places. And we are just going to see if anybody has any questions. There was a lot of information today, and I know we're just running at a couple minutes after 5. So if you do have any questions, fire those in the question box. And if you're shy about asking them there, you can, of course, reach out to Lynn. And of course, you can always send me an email too, and I will put you in touch with Lynn as well. So I love the idea of the storage units and investing in different places across Canada. A couple notes that I made: people have been asking about oversupply. And I think it's really interesting to talk about that. And I think the fact that they're investing in some outskirt locations is really interesting. Pender Harbor, Vancouver Island, there's loads of storage right, in Vancouver, but some of those other places where people still have lots of stuff, it's interesting to hear that some of those markets are being served. And then of course, with Geoff, we talked about Mexico and the diversity of being able to invest all across North America. And again, to get started with as little as $5,000. So I don't, I might be having a couple of issues with my little question box. I know we're just running over 5 o'clock, so I think what we'll do is we will wrap it up for now. If you have any questions, shoot me an email, liza@ren.club. Thank you everybody for joining me. Thank you, Lynn, and everybody have a great day. It's, what time is it out in Ontario, Lynn?
8:04.
Oh, so it's still early. Next webinar we do, it'll be 11:04 by the time we finish. Okay, everyone, thanks for joining us, and we'll see you next time. And lots of events coming up. Thanks, John. Thanks, Geoff. Thanks, Lynn. Bye, everybody, and we will see you next time.